half hour and I have to go to a child's band concert. So my kid's band concert is in like a little less than an hour. So I'm going to take a half hour with you guys. It's been 9 days since I've talked to you guys. I keep telling you we've been insanely busy, and I know I keep telling you we have content coming. It's been super busy, and it's like not just the market craziness that really has not affected us yet. But I wanted to talk to you guys today, and because I know a lot of people are like, we haven't seen BBT in 9 days. The market's going to crap. What's going on right now? Like, people are freaking out. So I've fielded more calls in the last 2 days to try to decouple what this market's looking like and give a relative perspective of like, what do you do? How are we functioning? You know, we've been doing a build out, a Bitcoin build out. We've been getting the farm ready. We're in the middle of the immersion conversion. A lot of stuff mechanically with these networks when you have a descending price and difficulty going up, like what's going on? How do we stay solvent? How's that all work? Or what's going on? Along with like, what are you guys doing from, your own mining situation where you don't have, the best output, and how do you pay your power? It's summer months. A lot of people have questions with regards to heat and control of that. Lots of fun stuff. So we're going to try to, in the next quick half hour or so, go through top to bottom kind of what's going on in this market. What's up? How do we, look at it? I'm not going to get into a whole bunch of stuff when it comes to Terra. I mean, we never really covered anything with Terra, the UST stablecoin, anything with Luna. I tend to follow and put my energy towards things that are proof of work based. That's why you guys hear us talk about things like Ravencoin. You hear us talk about Ethereum Classic, Bitcoin mining, things that require the consensus to be a piece of hardware and a decoupling of the consensus with regards to just not having it like a proof of stake thing. We don't cover a lot of that kind of stuff for all kinds of reasons. It's a science project and it's tested in production. Bitcoin's science project has been tested in production for now 12 years, going on 12 years. So like, I go and look at that from a standpoint of, where do we put our energy at? So we talk about a lot of the proof of work stuff, but I'm not discounting the fact of people that were injured and, wrecked on, putting a diversification of their funds across things like Terra and kind of follow the hype. There is a lot of speculation of how it happened and how that it was coming, and you're seeing a lot of things on Twitter. But that being said, I want to focus on what's sound in this space. I had a consultation earlier about this, of understanding the dynamics of what, cryptocurrencies bringing, the innovation, that piece of it. We're talking about disrupting fintech space in general. And none of that principles have changed. None of it. It hasn't changed. The foundational steps that are out there, the development and the people that firmly believe that we can do a better financial system are still building. They're like showing up to work and they're still doing stuff. We are in the back working consistently to make sure that we can secure those networks. That's the entire point of this. None of that's changed in these kind of market conditions for us. What ends up happening is our yields are reduced and our daily USD conversion profit is a little less. But not all that yield is always converted, right? Some of it's held. There's different strategies to do that. So this type of market conditions, living through 4 of them now, I want to say they're typical, and I don't want to sound that it doesn't affect us. It affects us because it affects other people. Like, it really, like, family members, people calling us, that kind of stuff. I look at it like the foundation of the network hasn't genuinely changed. the principles of what we're upholding, the principles of the security architecture hasn't changed. The basic fundamentals of what cryptocurrency is. People can manipulate that cryptocurrency efforts into like penny stocks. In 1932, the Security and Exchange Commission created structures around people that were trying to sell people snake oil and stuff and trying to do penny stocks and trying to do things. And what you have is that kind of behavior sometimes in cryptocurrency. They're taking the mechanism, the tool of what cryptocurrency is and its innovation, and they're wrapping it with a bow on top and saying that this is the new thing. And they copying and pasting code and putting a new name on it and convincing VCs to pump it. And then people are getting wrecked from it, man. And what I say is nothing beats a fair market launched coin. Nothing beats something that you have to put some effort behind, because there's a different incentive mechanism behind it. The incentive mechanism is a distribution over a schedule. It's known rules. It's taking that base premise of what Bitcoin is and adding features to it. You know, so Bitcoin being the center point and core of all of this stuff. So understand that sometimes you lose. And if you've taken a speculative risk on an asset that's went heavily down, you know, that's a bag. And if you're selling it, then you've committed that loss, right? Not everything is going to go up, nor should it. Some of it's just completely speculative bubble. But if you look at the foundational things that are being made by people that are, you know, sinking their life effort into it to try to make it better, those are the folks that I follow and that I look into and say, hey, this person's actually developing code. They're trying to make something better. They're trying to make it a utility. It puts a value proposition on the token that it is. And that may or may not come from a speculative price increase, but they're putting effort towards it. You know, I'll say that with Ravencoin. Ravencoin's down. It's like 2 cents. Maybe it's now it's in the penny range. IPFS assets, functionality, utility, cheap utility right now. This is the development time. If you're a developer and you're out there and you're wondering kind of where your place is at in this space, take a look at some of those. There's a lot of documentation. It's a very elegant and leaner solution. It's not as complex as Ethereum with all of its different, you know, possibilities on the smart contract architecture. It's UTXO based. It's a little simpler. And you can have some elegant solutions through that. I know Flux has an entire development core too of different options. I'm not as versed with Flux as I am with like Ravencoin UTXO stuff. There's Bitcoin layer 2 stuff. If we're talking Lightning and Liquid, those things are still being built. This market doesn't shake that. So what I would say is understand what coins have core development and value, and look into those. If you're not mining or participating, that's a good way to kind of start into it. Even if it's not a daily profitable thing, understand how the system works, understand how consensus works. That's what brings you guys an awareness and an appreciation of how these networks work. And that's what we try to do all the time on this channel and other channels, is understand the fundamentals of the innovation of what cryptocurrency brings, and understand that that's, while it's kind of building the ship while it's floating / flying building the plane as it's flying. The nature of cryptocurrency, unfortunately, the test nets do not get enough participation, because it's not where the value's at, right? It's if you look at any of the test nets, people don't test, and they test in production, and that's just a very risky, aspect of doing it. And that's why, like, people ask, like, I don't understand why you guys mine. Like, why are you guys mining? I'm like, well, if I'm mining, I'm taking essentially a dollar cost average type of approach to acquiring yield over a longer period of time, with my risk aspects hedged on a piece of hardware and my power cost. So I am not as exposed to a market trend like this, right? So a market trend is going to just, like, if you are in coins heavy, that means you bought them at a certain price, or you bought them over a series of prices if you were DCA in. On the hardware side, unless I'm selling the hardware, I still have my hardware value. So I'm still earning yield over that period of time. It starts to sink down. That's going to push some people out to where it doesn't make sense for them when it comes to the cost of operations. And it's going to have a descending type of event where they have to maybe power off, but they still have their hardware. So you're taking a risk averse approach. So where if you were to spend $100,000 and you're buying hardware, and now that hardware is going to earn you crypto over time, your risk approach is on the hardware, not so much that you're looking at the market going, holy crap. Those folks that bought coins and held coins only harbor a whole bunch more risk on times like this. So this mining is a perfect example of this type of time. You still have your hardware, right? So the times that markets have pulled back like this are times that I look around, I look at our facility, I look at this stuff, I look at our farm, I look at the expansion that we're doing, and I'm like, a lot of our capital costs are in this hardware, and it generates yield over time. But we are securing a network. We're doing it. We're hedging our capital on hardware, and we're going to be a participant in that yield. But yeah, sure, we could have bought a lot of coin with that at some point. And right now, like if we weren't buying hardware, we could deploy that capital and buy a cheap coin right now. But then we're just doing that speculative hedge on just the price and the token, where we're doing that speculative hedge on the price of the token over time, with the risk being split over the asset. And that's all it comes down to. That's the fundamentals that I saw very early when we were starting to mine. And we started scaling up, is that I liked that approach. Plus I'm a super techie nerd head person. Like I like testing out variables and things on graphics cards and ASIC hardware. Now that we have access to ASICs, it's a much more engaging and interesting engagement of participating in crypto. And I've said that over any networks that are not proof of stake, they're missing an entire group of individuals that could be participating in a way that is a lot more engaging than just buying a token and hoping that it goes up, right? And I think a lot of these tokens that you see get wrecked have no back end structure to them, right? They have they got some nodes. You don't know who the nodes are, which is fine. And privacy is good. But did they get in early? Was it a paid group? How is all this working out? Right. And then you see a lot of people get wrecked. If people started to realize that more and then focused on that infrastructure side of it and the support side of that, I think that there would be a lot more confidence in that system of upholding, the consensus in that way. And then the distribution of that would be shared a little more. So we get a little less yield, but then that may drive price and confidence in the space a lot more, because it is, based on this other participating group that may invest in hardware and then do some development. Like part of our BBT side, we have the mining side, but we also have consulting side, and we're doing app dev side now too. So it's like, we're participating in that Web3 environment to help move things along. And it's just through our expansion, we're reinvesting into the system. And then there's paid services for that, but they're getting that output of that thing. And I think more and more people start to build structure around that to participate in the ecosystem. You're providing utility for those tokens to work. I think that's what it's critical. That's why people are like, well, dude, you haven't had a video in 9 days. Like, what the hell? Like, the market's been fire, and WTF, my dude. Like, this is what we've been solidly working on this stuff. And we're working to internally pivot the way we're going to bring content to you guys. We don't have like the full-time editor anymore, which then relies on me. And I'm kind of doing a lot of architecture stuff right now. So we're going to pull in BBT Ray, BBT Cole to try to, work them into the help bring you guys some good content. Cause we have a huge amount of content sitting back here. On showing you guys how we operate, how this operation works, and then why we're going long on Bitcoin, why we're going long on proof of work coins, and peel back some of that that discussion from like why we have confidence in a market like right now. Like this market, it does not scare me. It's unfortunate. I look at it like there was momentum, there was things going on, and then we have, the Terra Casino happen with an algorithmic way to try to hold a stable coin where a lot of people were pointing fingers of like, this isn't going to work. You have a lot of existential risk here. And then now we have this massive sell-off because they have to cover their token. And now you have the momentum that was moving to keep things at least even though Bitcoin was holding that 33,000, we have this extra sell pressure and then a lack of confidence in the market from people that get burned because they're just like, you know what, I'm out, screw this. You guys suck. I'm selling everything. I'm dumping it all. And there's a lot of market sentiment that then begets larger wells that can take advantage of that sentiment and drive it further and scare people out of their tokens and just like sharks collect, a slow accumulation. You'll see these little blips. I saw it with Ravencoin the other day on Bittrex. It was pushing towards the 2 cent flat, and then you would see $15,000, $20,000, like just people buying chunks, just collecting the wounds and parts of people just selling into those, selling into those price points, and just knowing that, man, they're eating these guys alive because nothing's changed on the fundamental side. Nothing's changed the fact that something like Ravencoin's doing development. Nothing's changed on ETC moving development and having one of the best opportunities of gaining a huge network influence whenever Ethereum finally moves to proof of stake. Like these other proof of work tokens are going to have a spotlight on them for a little bit. And that spotlight's going to highlight what is the value proposition for these coins. They've had some history. They've had to fix some of that when it comes to like double spends of getting 51% attacks. How did they address that? Having a roll up of these coins that are proof of work. Because we're getting raked over the coals with coins that are proof of stake right now, or have some other kind of competing consensus model that is been, VC fed with people that have staked interest ahead of all of us being able to participate, where you have, fair market launch on some of these other coins, Flux, Ergo, those kind of things that have, VTC, there's Feathercoin. There was a lot of coins out there that were fair market launch. Like anybody could participate. Nobody had an edge over anybody. It all came down to like who's deploying hardware on it. And it was fair market. It was like, a run across, new land, putting a stake in it and having, trying to set it's like I always like to say, it's like the reset whenever you're playing a new video game. Like you're looking for your area, your territory, like on the dig build games, right? And you're like, I'm gonna understand what this coin is developing. I can participate from security. I get the token. Now, what can I use the token for? Is it just a speculative instrument, or is it something I can actually go and use? Can I buy NFT stuff with it? Can I participate in the metaverse space? That's where I keep pointing back to like Ravencoin as an example. We've mined Ravencoin. Like, you guys know, full disclosure, any of the main cryptocurrency mineable coins we have mined. So I'm not trying to pump Ravencoin. I'm telling you a feature and a function. We've mined Ubik. We mined eGem, coins that were EVM based off of Ethereum. For those tokens, can you use them in the ecosystem? Can I redeem some kind of feature, NFT, use a function in their system? Or is it just a speculative instrument where I can, we get our power paid for with a couple of those tokens? I've always told people, never, if you're a miner, you're upholding security. For that security, you're handed a token. A portion of that token is going to be sold because you're paying for your operations, but that's the expense on the system to operate the security model. And that's relative across ops costs. So if your ops cost is 13 cents per kilowatt, it's a math problem. How much coin are you earning? If you're earning $300 a month on it and it costs you $56 in power, you're probably selling $60 to cover, right? Some people don't do that. Some people just say, you know what, I'm going to cover that out of other capital and I'm going to just hold my coins. With the potential that they may go up in value and I'll get more for my money. And why do people do that? Well, people do that because they've seen the exponential growth of cryptocurrency. They see the value proposition of a limited supply and a higher demand environment where those coins may become worth money. You know, it's not the elephant in the room that miners don't look to hold and try to get a bigger potential capital gain on there. There's nothing to be ashamed or sorry about that. That's kind of part of the task and requirement. But don't be remiss the fact that we're also upholding the security of the network that allows those developers to have a more secure environment to where somebody's not attacking and trying to change the state of the chain in any way, right? So it's a concert of participants, and people have their particular roles in that. You know, there's been a lot of conversation with that. You know, ESG concerns, people worried about power. I have talked more about power, especially locally and regionally, as we're working to acquire a lot more potential power, renewable by and large, but power for mining operations, and having that ESG, conversation. Like, don't ever be afraid we're a power consumer. Power companies have roadmaps. Their roadmaps to get away from clean coal, to move on with more renewable. Us as a consumer is providing a value proposition to them of saying, I'm going to be a higher user and we're going to pay to help move that along. If you have a constant source of more revenue, you're going to move your plans along. You can run 2 engineering teams if you now you're selling more than what you had anticipated you were going to sell. So like a lot of those conversations around ESG I think are misread. If you're not going to attack energy use and as a whole, and you're going to target one industry, you've already lost the argument. People are charging their Teslas. There's a lot of things that are electric and battery related that you're going to charge. Are those being attacked? No. So it comes back down to, well, we don't need a fintech. We don't need a cryptocurrency. We have a current financial system. So this is not an existential threat to using power. It is providing liquidity for those power companies to make advances on their timelines, right? And that's the kind of conversations I have. It's just this is not complicated. It's literally a math problem. They have roadmaps, they have plans, higher use. Client comes in, allows their plans to progress faster because they have more capital. So it comes back down to, do they have the plans to create a more sustainable environment? That's the question. It isn't on our consumption side. We're a consumer. We use things. So, that was the argument before all this stuff with the market happened. Now it's like, okay, cryptos are going down. A lot of people getting wrecked. Your net worth on paper looks wrecked. If you sell, you're committing the post of that getting wrecked. I think that times like this are a time of caution, and understand that the fundamentals of the network have not changed. The fundamentals of this market, while they look like they're unstable, have not changed. There are institutions putting together opportunities to allow people a more graceful entry without getting wrecked to strong asset classes that have the backing and structure. When you talk Bitcoin mining as an example, that have proven that the volatility, short of Wells playing some games and exchanges playing a casino game with some wash trading, that has created weird volatile market conditions when it comes to volumes. Short of those type of activities, Bitcoin keeps producing blocks. Ethereum producing blocks too right now with proof of work, with a little more MEV lately because the network's been a little more excited on activity. So the MEV output's been a little higher. But, Ubi, all these different coins, Ravencoin, all producing blocks, functioning as a network. Providing development and new opportunities for everybody that are out there to be part of this space from a development space. None of that's changed in this market condition. The prices are cheaper. You can pick up some more coins if you want to mine and pick up some coins on this on the side. If you wanted to mint new things with Ravencoin, it's a lot cheaper to do that. Now it's 2 pennies per Ravencoin. I think it's 5 to make a NFT. Now you're talking a few cents. When it was 20 cents, it was like, man, I'm going to spend $1 to mint this thing. Like, do I want to try that? Well, now you can go try it. Like, it's a little cheaper. A few super chats in there, like I'm like a boss, my dudes. Thank you guys for those super chats. I do appreciate your guys' feedback on that. I try to be calm in these, and I'm sorry for not having more videos the last 9 days. I really, somebody had tweeted me a direct message and said, my direct messages are open on Twitter, and they were like, hey bro, like the market sucks. I don't know what's going on. Kind of freaking out. Haven't seen you in 9 days. How are you guys doing? Are you guys like, what's going on? And I literally was like, dude, I'm been crazy busy trying to make sure that our team is able to execute on the things that we've set goals for. And it's impacted what's given up some slack here has been the videos with you guys. And I was like, you know what? I have 40 minutes. I can jump on, have a conversation with everybody, see some of your guys' comments. Don't worry. If you guys have comments and you're asking me questions, I do go back through and read through your stuff. And I usually post like in the comments if you guys have a question. So especially on like the super chat guys. And if I didn't get to any questions you guys had in there, I'll put it in the chat below on the post of the video. But these markets have cycles. Nothing fundamentally has changed. Make sure, if you're mining, you got to look at your internal cost, what's your power rate. Understand, I had a guy reach out to me the other day. He was like, hey, I'm at 16 cents per kilowatt. It doesn't make any sense right now for me, to be mining, but I love mining and I don't want to turn it off. I like the fact that I'm getting yield, but it's just not economically making sense to me. And what I told him is, I said, you don't have to turn everything off. Consolidate down to your most efficient setup or rig, run that, let one of them run. It's a lot easier cost to maintain, and, clean off your other cards, put them off to the side, run what makes sense, continue to participate if you can with a single rig, even all the way down to one card. I had one guy said, hey, I only have one rig, but I'm running one card. He pulled all the rest of the risers, just ran one card. He was still out there making sure that his miner was updated, making sure that he could still do stuff. And it was a cheaper cost for him to just run the one card. Sometimes it isn't about all those crazy things that you're doing, because most of you guys that are mining realize you set it up, you get it running, you get it configured, you start mining a network, you're watching the content from the content providers that are out there. I see Red Fox in here, Panda, a whole bunch of folks, Son of a Tech. And you see people talk about different cryptocurrencies, and then you're like, oh, I got the itch again, but I have my rigs turned off. Run one card, run one rig. Continue to participate. Because what happens is you start to find things and read things because you're still participating in this space. It might not be wholly economical at that moment in time, but over the long tail, by and large, for at least the larger tokens, it has been a longer term better play. Because you're still getting at least some yield, and you're still participating in the space, and you're keeping up with what's going on, and you're earning while you're doing that. So take a more reduced overhead approach on times when the market comes back down, and that's what's going to happen. People are asking, what happens when ETH goes proof of stake? What's going to happen? It can't take all the network. If all these tokens, if Ravencoin's at 2 cents, there's no way it can handle network. It's dropping to 1.5 terahash right now. It used to be 10 terahash when it was 27 cents. What do we do here? What's going to happen is it's going to contract. It's going to contract quite a bit, but it'll contract down to where it stays remaining profitable. What happens is right now 1.5 terahash or 2 terahash is profitable for Ravencoin. People try to come over to it. It's not going to be. You'll see a pop of hash rate, and that may drive more confidence into the space because now it's got a lot more security, and people realize that are watching from the sidelines may go, you know what, Ravencoin and Ethereum Classic, Flux, Ergo, got it. Those are the 4 I'm watching. Those are 4 who's making the moves, who's got the development teams that are doing stuff, and one of those are going to take some of the weight because there's still a mountain of participation that is ready to engage on these networks. And that's effectively what happened from the transition from Litecoin to Dogecoin mining to Ethereum in 2015. So we had a period where Litecoin started coming into from Script, started getting Script ASICs. It pushed out GPU mining. It pushed it over to Feathercoin and Dogecoin and Feathercoin. Feathercoin tried to pivot a couple times, went to NeoScript and a few others. And then you had Ethereum come onto the scene in 2015. So over the 2014 period of mining, which you'll see in a lot of the old videos, that was the switch that we made. 2015 into 2016, we're doing mostly Ethereum Classic when it happened and split. And then we had Zcash come on. That's a name you guys haven't heard in a while. You know why you guys haven't heard Zcash in a while? And why everybody's like, oh yeah, Zcash. What happened to Zcash? Zcash made a decision to go full ASIC. And guess what? Nobody. And then there was there was only a couple ASICs that were built. It was a very small batch. And now like nobody talks about it because the ASICs were hard to get, mostly in China at the time. And you lost an entire community overnight that were a participating person. And look what happened to Zcash, right? Monero's always try to keep the CPU scene. Problem with the CPU scene is it's bait for botnets to create innovation around deploying them autonomously to CPUs, because CPUs are a very generalized piece of device, and people can write a lot of software around the concept of a botnet, and then the botnets end up taking over your coin. And you had FPGAs and some of the other issues. As Ethereum starts to move away, we're going to be looking at the Ethereum Classics, ergo Ravencoin, Flux. And I think that is what we end up seeing prevail. Who knows, though? Fair market launch. Somebody else could come onto the scene with some innovation. Development teams merge. There's going to be some Ethereum, core developers on Ethereum 1 that may move over to Ethereum 2 proof of stake. Some of them are like the consensus model, may come over to another team, and then you'll see a surgence on a team from a development standpoint and more capability from a client side and that. Nobody knows what's going on in the future. I'm just saying the way things could pivot and change if you're participating on the GPU side, and even just holding one GPU, it allows you to participate in that network, and that's what matters. All right, my dudes. I got the Kiddo concert coming up. Yeah, Firo, Zcoin. Our Zcoin became Firo. Shout out to Firo for the folks that are Firo. I'm hoping this was okay, guys. I wanted to have a quick 30 minutes with you guys. It's been 9 days since I had a video. I swear we're trying to make it better to have a more consistent stream set up with you guys. Not having that full-time editors really hurt us. We're working through that. But hopefully this content's been really good for you guys. Bot Crusher and GAD3D. Thanks for those super chats. GAD3D, we got your 3D print thing. We're going to be having a video actually on your stuff with an option there. So shout out to GAD3D. We're going to be doing a review of his 3D model that's open source thing. And I think he prints it for you for a small fee too. But hopefully it's been good, guys. We're gonna sign off here, and it's just straight good, hopefully info for you. And just stay calm. Make sure you're liking and subscribing, following on Twitter. Hopefully if this is your first experience